Welcome, ladies and gentlemen. So we've got some flavor happening this week. We got so much data coming out, and we've also got FOMC. And if you are new, make sure you subscribe because that is going to be a very, very big live, because Powell is going to be giving us the idea of whether or not we're going to get the interest rate cuts. But I just don't think we're going to get there. I just don't think so. Your economic data is coming in great for the US. Why should they be cutting? The economy is absorbing it. But we'll talk about that very shortly. In today's video, I'm just going to break down a few things in regards to where we are from a Forex perspective, because without understanding what's going on in Forex, why are you going to understand if anyone's going to be converting dollars into Bitcoin? Now, with that being said, we're also going to dive into a few Bitcoin metrics as to why this one chart could be giving us the idea that Bitcoin may not be done just yet. A lot of people are anticipating Bitcoin to pull back. It's made an all-time high. You know, how much more can it go? But this one chart could be giving us an idea that Bitcoin is still yet to continue its run up to the upside, given that there is so much institutional activity surrounding Bitcoin. You're just going to be asking yourself, when Moon, or when Lambo, or whenever it is, guys. The concept of price discovery with Bitcoin has always got everyone on the edge of their seats. And you've got to do something about it. Take something off the table, because there are a lot of players that are actually doing that right now. I'm going to be diving into that very shortly. So let's get with the program, ladies and gentlemen, and understand exactly what we've got to look forward to this week. Trade deal, Eurozone, 15%. It's getting locked in. Now, investors are like, oh, what's it going to be like for us right now in regards to the euro and the dollar? Well, you got to understand is with regards to the tariffs, it's ultimately going to be forcing all these nations to be transacting in dollars. The Japanese deal itself, they're committing to nearly $500 billion worth of investment going into the US. There's lots of money being exchanged, and it's all going over into the dollars. Check this out. Going into the actual price action, you can see that euro is taking a stab to the downside. And this is one thing about euro. When it breaks down, it really does move at speed. Now, this is because of the trade deal story. Naturally, you'd be expecting that when there is a deal between the euro and the US, it's going to bring optimism. But from a value perspective and a perceived value as well, it's not going to be serving the euro, because they're going to have to get rid of euros and convert them over to the dollar. Now, looking at the dollar dominance, you can see it's doing very, very well right now. And I've said it before, don't sleep on the dollar. This thing is going to come back with a vengeance. It's going to start moving up. We've also got some more data about the Japanese yen. They're going to be meeting on Thursday, which is where we go into the idea of this week's data that's being released. But it's really important that we pay attention to what the Japanese say about their interest rates, because now that they've got a deal with the US, they are going to have to convert yen into dollars. The idea of a possible rate hike in September is being discussed, but it's going to be very unlikely for them to do that, because they have to now get involved in buying dollars, which does put them into a little bit of a problem. Why? Because if the yen goes down against the US dollar, that brings dollar yen to significant levels, and those levels are consistent with Forex intervention. What is Forex intervention? Quite simply, it's when a nation buys a number of, in this instance, US dollars against its own currency, just so that they can then get those dollars, convert them back into their currency, and devalue the dollar currency. So in this instance, you can see these blue lines here is when the Bank of Japan had purchased a large amount of dollars just so that they can control the value of the US dollar against the Japanese yen. This is why Donald Trump kept on talking about the Japanese being fraudulent and manipulating currency pairs. He doesn't like it. So looking at this chart, you can see that we've recently had some Forex intervention. And given the trade deal that's coming with Japan, it's going to force the Japanese to buy dollars, so sell yen and buy dollars. It's going to naturally inflate the value of dollar yen and send it into Forex intervention levels. Now, we know on Thursday, the Bank of Japan are going to be having a press conference. They're going to be telling us where their interest rate path is likely to end up. They are talking about the idea of doing an interest rate hike in September, but they are kind of slow about it. But let me just twiggle your mind a little bit. It will be exactly 1 year to the anniversary that the Bank of Japan increased their interest rates last year, which led to that bloodbath on the 5th of August. That bloodbath is what you refer to as the carry trade principle, where investors saw that they had already borrowed yen and converted it into US dollars, but because the Japanese had increased their interest rates, that meant that anyone that had borrowed money before was now going to be spending more in interest, and they didn't like that. This was Bitcoin, took a slump to the downside, and it was a very fast move. But of course, it then triggered a wonderful move to the upside. We are now at that anniversary point. Bank of Japan could simply come out on Thursday and say that they're going to increase their interest rates and be adamant about it. We don't know what's going to be said, but Thursday is a very important day. Bringing you over to the calendar, this is exactly what we've got going off. Tomorrow, we have the JOLTS job openings report. The jobs report is made up of a number of things. You can see it says the job openings, which is the blue line. The hires is the red line. The yellow line is the quits. And of course, the green line is the openings rate. What you can see is the quits is pretty flat. It's not really doing too much. Equally, the red, blue, and green, which is the openings, the hires, and of course, the job openings rate, is showing a trajectory of movement to the upside. And it looks pretty sharp as well. This is what the Federal Reserve pays attention to. So when we get the reading tomorrow, if we do get a reading of anything above 7.49 million, even though we had a 7.77 million reading last time, it's just going to solidify the idea that the Federal Reserve does not need to cut the interest rates. Before we get into cryptocurrency, on the Traders Reality website, there is a discount code that will be expiring at the end of this month. That discount code gives you 20% off the Platinum membership, where you do get access to trade setups using the hybrid system. Now, you also get access to a number of other things as well. It's effectively like a one-stop shop for everything around the hybrid system. So if you do want to learn the hybrid system, the Platinum membership gives you an in-depth breakdown of how to utilize it and apply it in your everyday trading. You get access to PDFs which help you use as checklists on certain strategies regarding the hybrid system, and you get access to all of these and you can download them as part of that membership. But use the discount code at the checkout. It's called All Time High. It shows it's lowercase here, but it's all in uppercase format. Put it into the coupon area and it will give you the 20% off your first month. So go check that out, and that's all in the description of this video. So the Eurozone has a problem with stable coins because it thinks that it undermines the euro in terms of a currency, and it just puts all of the attention on the US dollar. Well, that's exactly what Trump wants. He doesn't want the Chinese to take over in cryptocurrency. That's why he's trying to do rapid adoption of dollar-linked tokens. It does undermine the Eurozone. Why? Because you're effectively saying to people that we can get your money from one point to the next at speed, and it's going to be backed one for one against the US treasuries. Happy days. That is going to encourage everyone to start using stable coins and dollar-backed ones as well. The Eurozone seems to think that it's going to encourage a lot of black market activity, fraudulent behavior, and illegal activities. But I mean, that's not really it's not really a solid reason to not allow the freedom of people or businesses to be able to use stable coins just so they can move their money from one place to the other with minimal effort. Now, in other news regarding crypto, Metaplanet has expanded on its Bitcoin holdings, and of course, SharpLink acquires more Ethereum. Now, when we go into the cryptocurrency charts, we can see that Bitcoin is doing wonderful things right now. It's doing very well to hold above the 5 and 13 EMA that you can see right here. And it is still showing signs that there is going to be potential for movement to the upside, which brings me into the idea of why there is a very important chart that could be giving us a clue that there is still more room for Bitcoin to move up. In front of you is the MVRV ratio. And quite simply, it's the ratio of coins market cap to its realized cap, which indicates whether the price is overvalued or not. Any reading above 3.7 would suggest that Bitcoin is overvalued. Any reading below 1 would suggest that Bitcoin is undervalued relative to its market cap. We're at 2.3. Buy it. That's what you got to do, ladies and gentlemen. By this principle, it says. That was a joke. It's common sense. It implies that Bitcoin's market cap to realized value, it's just not meeting that extreme yet. So there could be a possibility that Bitcoin is still in line to continue its move to the upside. I gave a price projection on me believing that it will take Bitcoin around 2 months from that update to get to $150,000 a coin. based on this chart right here, it could be giving us the idea that maybe that is something that could happen. But when you look at the differences, every time it hits the peak, that's when it pulls back. But sometimes it doesn't always go to the peak and then it starts to retrace, get to a level where it's deemed as undervalued and then continues up. Right now, we're holding out in this 2.3 zone. We're effectively looking for Bitcoin to get up towards that point, which could send Bitcoin to 130,000, 140,000. Maybe when it hits that extreme of 3.7, that could be the point that Bitcoin hits the 150K mark. Looks like that could be the case. And given that you've got so much activity happening, I mean, we're at an all-time high again with the ETF balance, 733,000. BlackRock ETF assets under management are coming close to $100 billion. I mean, what more information do you need? To back the logic up even more, look at the open interest. We are just flying up right now. And this open interest is, of course, coming in on all exchanges, but people are showing commitment. They have expectations of Bitcoin's price to continue higher. Going over into liquidations. Lots of people think Bitcoin is done. Look at these short liquidations on high margin. If everything is optimistic across the board, then naturally you're going to think that people are going to be optimistic about cryptocurrency. To back that logic up, go to the stock market. In front of you is the NASDAQ. And last week, look at the volume on accumulation right there. This red line here shows you that there is volume above average and it's all closing on blue days or positive days. It's rising at the all-time highs. Bring it back even further. Smart money, dumb money, still selling. They're still selling as price is rising to the upside. And we can see that because it's now hitting another extreme. So when this smart money indicator or this blue line shows you it's going below the actual dark dashed line right here, it tells you we're hitting into an extreme where smart money is aggressively selling. Well, who are they selling into? Well, ladies and gentlemen, it's risk on. Look at it. The risk on off indicator shows you that when it's the black line and it's pointing upwards, it means investors are taking on risk. When it's the red line and it's trading in these subzones here, people are fearing or concerned at taking risk in the marketplace. So they are risk off. So the idea is that we are in what is appearing to be a sustained bull run. But throughout the week, the flurry of data which will solidify whether or not the interest rates are going to get cut yet, whether it's going to be in July, very unlikely it's not, but in September, if we get any readings that are positive showing the US economy is sustaining itself, there will be no interest rate cuts, ladies and gentlemen, and we're going to be stuck at that 4.25, 4.5% level. The truth of whether this rally is going to continue is right here in the earnings. We've got earnings from Visa, Procter & Gamble, United Health Incorporated coming in on Tuesday. Now, of course, these are decent companies and they do have a lot of market cap, but the basis of this rally to the upside is all about tech. Wednesday, we go with Microsoft, Meta, and of course, QCOM. What's important about Wednesday? It's the FOMC day, okay? And that's when you got to get yourself prepared for some crazy volatility. So just remember, make sure you are subscribing, guys. Go to the Traders Reality channel, hit the like button, subscribe, because that's going to be one of our largest live streams. And it's going to be one of the most anticipated because Microsoft, Meta are all going to be declaring their earnings at the close. So you're going to get volatility from FOMC, and then you're going to get more volatility coming into play as to whether or not Microsoft and Meta are doing well with their expectations on earnings and what their expectation is in the future with regards to AI and tariffs. Topping that off on the Thursday, we've got Apple and Amazon and MasterCard. These are all things that are going to let us know whether the consumer is spending money and is comfortable in doing so, given that the interest rates are high. And if the data this week comes out and gives us any inkling that the US economy is fine, I mean, you got non-farm payrolls on Friday, and if that comes in with a surprise reading and keeps everyone excited, then you can appreciate that the interest rates are going to stay high, and that is going to be the bane of Donald Trump. Is it worth taking a risk this week? Or is it worth you just opening the charts, buying Bitcoin, and just sitting back and hoping that everything works out? Quite frankly, guys, we've got a lot of data that's going to be released this week, which is going to set the path as to whether or not investors are going to be seeking safe havens or they're just going to continue to stay in risk-on environments and just keep on buying and buying and buying. I said it again. When the Fed decides to cut the interest rates, that's when you get the pivot. That's when everything pulls back and discount season starts to come into play. when you're considering whether or not you should get into Bitcoin, just always buy Bitcoin dips, because the players that are buying Bitcoin are stepping in and picking up a lot of it as it pulls back. So just make sure that throughout the week, when you are investing or trying to take advantage of any movement on any asset across the board, just make sure that you're not allocating too much of your capital, just in case we get a bit of a wild story being thrown at us with regards to tariffs, with regards to the economy, or even with regards to interest rates. Just prepare yourselves for absolute madness this week, but there will be order in the chaos. Have yourself a wonderful day, ladies and gentlemen. Mad love and respect. And make sure you subscribe. It's free to do. Take care of yourselves, gang. Peace.